Centum Real Estate has many owners. It's a subsidiary of Centum Investment. Centum Investment is a listed company with 38,000 shareholders, listed in Nairobi Securities Exchange and Uganda Securities Exchange, with the government of Kenya owning 25%. And it's been in business since 1967. So we've been there for 58 years. We represent a new generation of explorers. We are in an advanced economy where we can get access to new technology. You have access to new financing. You have skills in medicine, healthcare, finance. And you've mapped out new ways of doing business. These ways can be taken back home, and we can create better communities there. You have exposure. You have access to big capital pool. You have standards that are global, which was spoken about by, I think, June. And these can be put in our key sectors in the economy: real estate, agriculture, manufacturing, education, and wherever your expertise may be. I'll speak to this real estate segment. The population in Kenya keeps growing. I think our growth rate is 3%. And the number of houses required to house that population increases by the year. So in 2019, when the census was done, we were 48 million people. In 2025, we had 53 million. In 2040, we'll be at 70 million. In 2030, we should be 57 million. These people must be housed one way or another. They need homes. Today, we have 13.8 million homes from the census that the Kenyan government has given us. And the houses are not enough. Even the quality is not good. The pent-up demand, because we've not been developing at the pace we should, is 2 million homes. Every year, the people who live rural areas move to urban areas to look for opportunity. There are people who relocate back to diaspora, back home. Nairobi is a financial hub. There are people coming from all parts of the world to set up there. They need housing. We need 250,000 homes. The supply is just 50,000 homes. Unity Homes, Centum, and everyone else. We are barely developing. Now, according to government data, the report from Kenya National Bureau of Statistics, Nairobi market, 9 in every 10 Nairobi residents are tenants. So if you have built and it's in a nice location, it's a nice home, you'll get rent. And people are actually paying a premium relative to the value. So there's a huge opportunity. And you in the diaspora have access to capital, you have access to technology, you have access to many things. You can invest back home. The numbers, the fundamentals support that investment. What is driving this growth? I think I've spoken about it. There is a growing middle class. There is urbanization. There's population growth. There is rural to urban migration. There are infrastructure developments. Then Kenya is a regional financial hub for East Africa, and the affordability metrics of it, so you can invest, particularly in apartments, and really get a good return. The average yield is 9%. In good neighborhoods, it's in excess of 10%. And the global studies have seen Nairobi as one of the highest rental yields in comparable cities across the world. Why would you invest in real estate? Miles covered this, but first is you can diversify your investment. So if I was to ask you to declare your wealth, I think real estate would account for a substantial portion of your wealth. That is land, property, buildings, and the rest. Then this asset appreciates in value over time. Those of you who came to, let me use the tax expert, who the last paycheck was in 2000. In 2003, I think an acre of land in around bypass in Kamakis, which you may know, or even at Two Rivers, must have been 2 million shillings. And an acre in other places was 100K. And then when no one was buying, people donate or give it to a charity of your choice. An example of Two Rivers, an acre now is 500 million. Yes? Even in that neighborhoods, an acre of land is like 80 million. It's appreciated in value over time. Why? This demand for the population growth, the urbanization, people must be housed. Even, let me use the example of Houston. Houston was established in 1836 by the Aran brothers. They bought this land, named it after General Sam Houston, who led the Texas Revolution, and he was a senator and the first president of Texas. So in 1836, these guys bought this portion. They created this, and they thought it would be a major logistics hub. That's why you have this city of Houston. So I think you know the history of it. That's how it was set up, and then now it's a logistics hub. There is the National Space Station and the rest. So Nairobi, if you take the number of years from 1836 to where we are today, if you now project it, Nairobi could be something else. Two Rivers, Tatu City, and the rest could be having an impact to the global economy. Then legacy, you can pass this to your generations. It can give you passive income. And you don't need to be Nairobi to invest. You can be in any part of the world, invest and make a return. So all those are very good stories, but what is the risk? The first risk is there a market? And that has been asked. From our own analysis, there's a huge untapped market, and it's growing, and you can make a decent return investing in real estate. The other risk is change in regulatory and policy. Every day, including the finance bill, things keep changing. So you can invest in frameworks that have certainty. 3, liquidity. If I buy, will I get a return on investment? And if I want to sell, real estate is extremely liquid. Will I get someone to buy? If it's in a prime location, you will. Construction risk. Many of us buy off-plan. Projects are not finished on time. And how do I mitigate that risk? You can work with developers that have a track record, especially those with a track record of even not completing projects, but then figuring out and they complete. So you know they will solve problems. Then there is a title and legal risk, where there could be fraud. You do comprehensive due diligence. Currency risk. I'm in the US, I'm earning my income in dollars. I'm investing in Kenya shillings. The currency is moving up and down. How do I hedge my risk? So in some of the neighborhoods, like Two Rivers, it's in close proximity to the UN, the diplomatic blue zone. So the rent is in dollars. So you can invest in, you earn your money in US dollars, you buy the property in Kenya shilling, you rent it in US dollars. But Mr. Tax Advisor there will explain how to mitigate tax. Then will I get a tenant? Yes, depending on who you work with. If you work with an organization that has professional managers in prime location, you'll get a return. Interest rate, you can get fixed rate KMLC financing. And if you're buying from diaspora, I think from the look of things I've heard, cash is not an issue. Opportunities are what is missing. Okay, and we are here to bring those opportunities next.